Hello, ladies and gentlemen. My name is Greg Michalowski from ForexLive.com. Today's date is May 5th, 2016. It's Ascension Thursday. That means not many traders are around in Europe. We have bank holidays in Switzerland, bank holiday in Germany and France. And so that typically leads or should lead to a narrow trading range day, but that was not the case in the euro versus US dollar. We saw a sharp move to the downside here. That saw the price move from about 114.90 down to 114.14. Not a bad move in a relatively short period of time. And it brings up a point about trading, and there are opportunities to trade, and sometimes those opportunities aren't driven by any fundamental news or anything that's necessarily earth-shattering from event or event or economic release format. It just comes, and it comes because the market moves below a technical level oftentimes. I believe in technicals. I think you should too. And so the trade of the day, if there was a trade of the day, came right here against the 100-hour moving average. The market was, you can see if you looked at this and thought of it as a heartbeat, the patient was dying through here. The range was about, I don't know, 12 or 13 pips through the whole Asian Pacific session, and then the market started to move to the downside through here. If I looked at the 5-minute chart, you might say, well, it probably went and I couldn't get on. Well, here is that activity right here where the market started to move lower. This step line is a 100-hour moving average, and the smooth lines are the 100-bar moving average and the 200-bar moving average on the 5-minute chart. So all those moving averages all came together here, and you can see the non-trending nature of the price action in the Asian Pacific session. And suddenly there was something different, okay? Something different that you, I, and everyone else in the world could see. And that difference came right here where the market, this bar got a little bit bigger. There was no economic news coming out. There was no speech, as far as I can tell, that caused the market to move to the downside. And you can see it wasn't exactly, even if you sold at the low right here, it's not that far away from the line. You could have easily gotten on the trade. But it turned the bias around. It turned traders from this market is going to die and I'm going to die too, to, well, maybe there's some hope to the downside. And traders jumped on that opportunity because risk can be defined and risk can be limited. Traders could put a stop right here. They could have risked a small amount through here that looks like fairly big, but it's really not in comparison to what the actual move that it made. Maybe even go down to risk below the risk or sell right here on the break of the new low and risk this amount. It's really not that much as far as pips. And then what does the market do? It does what it should do, okay? And in this case, you win. It didn't reverse. It didn't go back higher. It didn't stop you out. You got on the trend or on a trend type move, and all you had to do was sit there and watch it go lower, 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 lower without any news, without any risk from event or whatnot that would cause the market to whip back to the other direction. So that was today's trade of the day. If I go back to the hourly chart, there might be a second trade of the day actually forming. It's probably not going to be as big as the first, but that comes against the 50% retracement level. If I can get my arrow here, 50% retracement level, and this swing high right here, you can see the market broke above that level there. But this line right here is a key support line, and traders who sold up here, I can imagine, were happy to buy down here. So they made the full move to the downside. Now, could you have bought right here and hope that the market goes higher off of that? Yeah, but is it likely to get back above the 38.2, get back above this low? Probably not. So this was the trade of the day for today. Okay. So now what was the trade of the day yesterday? Well, there was a trade of the day yesterday right here again against the 100-hour moving average. Market came down and started to move and move back higher. Was it the equivalent of today's trade? No, we don't know what's going to happen. We just know that we have defined risk and limited risk, and that was the trade of the day. What was the trade of the day the prior day? Well, on this day right here, what did the market do right here? Tested this trend line that had 1, 2, 3, 4 different points on it. Now, traders who had the courage to buy against that level might have put their stop loss right here. Risk was defined and risk was limited, and the market moved sharply to the upside, so that was probably the trade of the day. Same goes true right here, trade of the day here, trade of the day here. so on and so forth. There's oftentimes a trade of the day, and we as traders have to look for it. Look for it against technical levels. Technical level is going to lead the way. So as mentioned, currently right now in the euro versus US dollar, we may have the shaping up of a second trade of the day, but I don't think it's going to be as powerful as the first trade of the day. What we as traders have to realize is that each day there may be an opportunity that makes the that is the trade of the day, and to the end, if you can catch those trades of the day, you're going to do pretty good. If you like this video, please make sure you click the thumbs up. If you don't like it, click the thumbs down. Also, if you want to subscribe to our YouTube page, click on the subscribe button. And at the bottom of this post on our website at forexlive.com, I have a button that says subscribe to our email list. That will keep us in touch with you and you in touch with us. So make sure you click that and put in your email. Share your email. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.